Good afternoon, everyone. Myself, Omkar Gurav, on behalf of Kirin Advisors. It's pleasure to welcome you all to the Beyond the Numbers Value Discovery Summit 2025, powered by Value Educator and co-powered by Kirin Advisors. So, today marks day one of our three-day summit with the series of focused management meeting lined up. So, this marks the third engagement of the day with Shree OSFM E-Mobility Limited. From the management team, we have with us Mr. Nitin Shanbag, Chairman and Whole-Time Director. Good afternoon and welcome, sir.
Good afternoon, Gaurav.
Uh, uh, we have Mr. Shiva Pasandi, Chief Financial Officer. Good afternoon and welcome, sir.
Good afternoon, everybody.
We have Mr. Suraj Josh from as a Business Development Head. Good afternoon and welcome, sir.
Good afternoon. Hi, everyone.
And we have Mr. Vikash Jain, Company Secretary. Good afternoon and welcome, sir.
Yeah,
So,
Vikas is traveling, so he might have black spots.
okay, no issues, no issues.
Okay.
So, from Value Educator team, we have with us Ms. Swarangi Moye. So with that,
Hi, good
now I
afternoon,
hand
Saran.
over the floor to Ms. Swarangi. Over to you, sir. Over to you, Swarangi.
Thank you for the introduction. A brief introduction before we begin. Shree OSFM E-Mobility Limited is a corporate mobility and employee transportation solution provider servicing large enterprises across IT, aviation, BFSI, media, and other sectors. The company operates on an asset-light model, working through an extensive vendor network rather than owning most of its fleet, which enables flexibility, scalability, and cost efficiency. Its service portfolio spans end-to-end employee transportation, driver-driven rentals, shuttle operations, event mobility for MICE requirements, and on-demand transport. The company also integrates real-time tracking, route optimization, automated scheduling, and fleet analytics through its technology stack. With an increasing focus on electric and hybrid mobility solutions, Shree OSFM supports corporates in meeting their sustainability goals while ensuring reliable and compliant transport operations. With that, I hand over to Mr. Nitin sir, Chairman and whole-time Director. Over to you, sir.
Thank you, Swarangi, and welcome to all the investors for joining on a Monday morning, which is usually busy start of the week. And thank you, Value Educators and Kirin Advisors for organizing this thing. It is good to meet up with the investors and give them the information in the real time. I have a great team out here right now who will take you through. But as the chairman of the company, I would like to start this session saying that yes, we've had a good year and a slow year. It's not a bad year because certain initiatives that we started uh, during this for transitioning into a larger, bigger market into the B2C took its own time and which did not get reflected in our financials. Post COVID, what we are noticing is that the decision making from clients is taking a little more longer than usual. And that's mainly because most of the people either work from home or for large projects, the multiple approvals that are required take its own time. Earlier, it used to be anywhere between 4 to 5 months. Now it is moved to 6 to 7 months or even longer. But in the meanwhile, we have used that time to enhance our capabilities, to start these initiatives on a conservative note, have had our learning curves in the challenges of those businesses, have we been able to overcome those challenges, and going forward, our roadmap is a robust roadmap. For further details about how that roadmap is going to pan out for us, I will hand it over first to Suraj to take it forward, and then the financial impact to Shiva to explain to our investors as to how this roadmap is a robust. It has a combination of both conservative and aggressive. Yeah, it has a component of both conservative and aggressive.
Sir, your voice is quite low.
Yeah, can you hear me now?
Uh, no, no, sir.
So I think
Yeah, it's now.
I'll have to switch off my video.
Okay, fine,
Okay.
sir.
Now am I clear?
Yes, yes.
Yeah, okay. So I don't know where I dropped because my voice was low. So to my investors, welcome. And we are on a steady state growth mode. All the initiatives that we had planned for this year have panned out. Yes, but they have been slow and not sufficiently translated into our P&L and balance sheet because from a B2B perspective, decision making was slower from our client side. Decisions which would happen in about 60 to 90 days are taking more than about 6 months to 7 months now. Okay, that is one. But the new initiatives that we planned in transitioning to B2C are on a steady state growth right now. The further details of how that is going to pan out in the coming years, in the coming financial years, Suraj will give you a detailed thing. The financial impact of that will be given by Shiva sir. So I hand it over to Suraj sir first, and then once he's through with his development roadmap, I would request Shiva sir to take over and explain the financial impact of that.
Yeah. Thanks, Nitinji. So, hi everyone. When we are talking about the growth path, I would want to divide the entire growth into 4 different stages or 4 different approaches that we are going ahead. One would be the current business that we have, which last year ended at we are talking about 1.4, like 140 CR to it. The first approach is basically to retain this entire business and also to grow the current business. What we have done for that is that we have had people coming in for the key account management roles, which are basically people who are going to retain these accounts and also to cross sell and upsell, to have more, take the larger share out from the competitors kitty also, and to have larger potential of as in when there is more increase towards the employees coming in and starting to join more and more, we are grabbing that market. So there is a growth that we are looking at coming in from our current set of business. The second layer would be where we are approaching and we are in the final stages of a lot of RFPs, where we are grabbing the new set of business coming in the market, where we are bidding our services to the other MNCs who have not been in our kitty, and we are grabbing aggressively there. So there is a team of business development people we are talking about who are working in all the large metros aggressively to grab in more business coming in. The result of these new businesses coming in would reflect mostly towards the next year's business, but that is also plan of the growth side that Mr. Nitinji also notified. So these were the first 2 approaches we are going ahead. Now talking about the other 2, which 2 segments which I'm talking about is the specific growth we are entering into new markets, which is very different from the normal DNA what Shree OSFM carries. Somewhere we are also looking at grabbing the market in the B2C segment, where we are able to solve the problem for directly from the end user itself. The first initiative what we did was we partnered with Uber, and we are basically looking at having our own vehicles with drivers going ahead and supporting the business, and have the ride hailing business of B2C, which is itself is almost close to $10 billion market in India itself. So we are closely working with Uber on having these vehicles and drivers coming in here and add into our kitty of top line and bottom line at the same time. The second initiative in the growth part is we see a lot of potential in the intercity market of movement, where we see movements like from Bombay to Goa, Bombay to Pune, Bombay to Indore. These kind of movements that we are talking about across India, we have partnered with one of the largest players in India who have come from, who was already the largest player in Europe market and entered in India, which is called Flix. So we have partnered with them and started couple of routes like Mumbai to Pune, Mumbai to Goa. Our vehicles are already running in. These last both are asset heavy businesses, but they also bring in a solid amount of top line. So these are right now the initial stages of where we are testing these businesses as well, which is the leap from our side for the next set of large growth expectation is going to come in the coming years from these 2 sides as well. So like I said, the 4 new initiatives are basically being aggressive on our current business, scale up the next set of business and employee transportation with the set of team coming in, entering the B2C market, which is the Uber, partnerships, large partnerships with two very large players. One is Uber and Flix. So these all together will be consolidating. This year would be a slow beginning on these numbers of our partnership, but this year will mark a very, very significant growth trajectory for Shree OSFM in the coming years. And this year, like Mr. Nitinji also said, this was basically the year where we consolidated and we understood where do we take this company in the next set of years. And that is what we've started. The stepping stones have been laid in this year, and this is where we'll be further going ahead. I would further want to hand it to our finance person, Mr. Shiva, and he can take it forward with the numbers side. Thank you.
Mr. Shiva? Hello, Mr. Shiva, are you there?
Am I audible?
Yes, sir.
Shiva sir, you can go ahead with the numbers. You are audible.
Yeah.
Hello.
Yes, sir, please go ahead. Hello, Shiva, sir. I think you are on mute.
Hello.
Sir, you are still on mute.
Am I audible? Because hello.
Sir, you are audible now. Yes, sir, please go ahead.
I think everybody is waiting. There is a slight technical glitch. Shiva sir will join. Okay, but I'll just give you a brief about Shiva sir. Are you there?
No, sir, he is not here. I think he
Okay,
left. I
fine.
think there's a technical
Okay.
issue.
So of course, I mean, since I have the entire for the investor teams, we are on a steady state growth. Yes, that growth numbers will get reflected to a certain extent in the financials that we close around March 31st. And the reason I've already shared that the decision, the order, the business conclusion happened at a much later date than what we anticipated. So as a result of that, those numbers will get reflected in the next year's quarters. like we are starting a mega project on a project that was supposed to start somewhere in the month of October has got delayed from the client side, and that will start on the 1st of January. So that 3 month consolidated revenue will start getting reflected only from the month of February, because in our business, in the B2B business, there is a 45-day gap from the time we start the services to the time that it gets reflected as a billing to the client. So only a part of it will get reflected in this March financials. So overall, we will have a decent growth, balance sheet and P&L this year. We have been able to hold on to our margins. Yes, our margins will get slightly affected because we've spent in the team building exercise as well as the fleet building exercise. We have sufficient reserves to take care of it, take care of the expansion plans. And from an aggressive growth path, having learned a few things about these new initiatives, we have already mapped the requirements as to where this financials will help us. If there are some, by the time I think Shiva sir will sort out his glitch. If investors have any questions regarding that, either I'll take it, Suraj will take it, or Shiva sir by then will be able to sort it out. So I think you can start off with the Q&A session.
Okay, okay. Thank you, sir. Thank you for your explanation. So participants, now the floor is open for Q&A sessions. Kindly raise your hands or you can drop your questions in the chat box. Yes, Mr. Anurag, you can go ahead and ask your question.
Yeah, hello sir, how are you?
I'm good, Anurag sir.
So
Good
sir,
to see you on a Monday.
yeah, same here, sir. Sir, to one or two questions, sir. As of now, how many buses we have deployed in the Flix model?
Suraj? Presently we have deployed 2 buses on 2 routes. That is the Mumbai-Goa route. We prefer that route because it's a heavy season route right now. In fact, we are getting our waitlisting is growing by the day.
So
We have
fortunately, sir, good news is that I was in Goa last week and I actually saw the buses over there. I also saw the bus, there was a counter, like I think there was small shop also. The Flix has opened a
Yeah, yeah.
center over
So,
there.
Anurag, if you were in Goa, mostly those buses might be ours only. We were the ones who actually started that route of Mumbai, Goa for Flix. And we
Yeah.
are currently in discussing few more vehicles to come in, and we can start in further routes like, Indore and Ahmedabad and all. All those discussions are as of now going on. So, yeah.
Mhm. And what about Uber? How many cars deployed?
We started this with close to 50 vehicles, Anurag, because in both these initiatives, because these are somewhere as a culturally new to us, we also want to understand the nitty-gritties and see where we grow in. So we started with 50 and we are able to clock a decent amount of number here, and we are now looking at how to increase these numbers. So yeah.
And if I'm not mistaken, like what kind of a payback period are we looking at these both models for the vehicles that we buy for each vehicle?
Payback in the sense, Anurag, just to if you can elaborate
I
it.
mean, how much earning we are expecting from each vehicle to cover the capital cost, basically, in how many months we'll be
So,
able to cover
Anurag,
the capital
normally
cost?
this number, how this goes, this is to be, I can give you a range. Normally, we expect at a monthly level somewhere like 80 to 90K kind of a business at a vehicle level in a steady state when operations and all are going in. So that is what the
For
kind
the
of number we
For the Uber.
Uber. That's
Yeah.
that's the billing comes in. From there, obviously, we'll have to take in account of the EMIs, the driver payouts, the
Mhm.
CNGs, and all these costs of infrastructure, everything. But at a top line number at a vehicle level, usually at a steady state, it goes up to 80 to 90K per month.
And what about
that
the
is.
bus?
I would like to add there. That is
Hmm.
as far as the Uber fleet is concerned. One point to be elaborated is, since we are an asset-light company, we are working and we are pretty successful in probably getting inducting vehicles on an asset-light model even in Uber. Our teams are working on that, and I think that should be the super growth. That is the game changer that we will have, and we've got permissions from Uber to do that right now. What Suraj was mentioning was 80 to 90 on this, and around 7 to 8 lakhs in a bus. Correct me if I'm wrong, Suraj, right?
Yes, Nitinji. That's what we are looking at monthly number per vehicle.
Yeah, and Anuragji, the payback period for us is a 42-month payback period. There are capital costs for the cars. It is going to be 36 months, and for the buses is going to be anywhere between 42 to 48 months. That's how we factored the cost.
Okay. And as of now, if what would be our cash position? Like,
We are sufficiently covered.
okay, so I mean our cash reserves which were there at the end of the closing of the half yearly numbers, we are somewhere nearby there, or we are increased from there.
No, we have increased because as we have not distributed the dividends, the last year's profits and the profits that are the PAT level numbers that are getting added to the reserves itself.
Mm-hmm.
We are funding this through debt right now.
And sir, one more point was that see there has been a good cash flow generation in this particular financial year, but going forward also, will such similar cash flow generation will be there, or how it will be there?
In fact, it will be on an increased percentage.
Increased percentage, okay.
Yeah.
So okay, that. And sir, this number, half yearly number for March, what are the any guidance you can give for for March?
We are in a steady state growth.
Mm-hmm.
We'll be able to give you accurate numbers somewhere, right now, as I said, the initiatives that we have started will start getting reflected. Had it been, I would have been able to give you the numbers, accurate numbers. All these initiatives are being clubbed together. Our teams are working on that. And we'll be able to, but we can comfortably say that our balance sheets are going to be looking much healthier compared to what we were last time. We will maintain the average growth that we were maintaining all these years, but that aggressive part of our business strategy has started paying off. As I said, it was a conservative, aggressive strategy, which will start paying off right now. And combined with the late decision deployment that happened due to client side from a B2B business.
Okay, so probably we'll be better off, like we'll be closing somewhere upwards of 150, 160 crores.
Absolutely.
Okay, that's all from my side.
Thank you, Mr. Anurag. Yes, Mr. Janak, go ahead and ask your question.
So the question was actually a bit similar to what the last question was regarding the numbers of the March 26. So you expect it little better there, right, than the last year?
For me, on a personal level, everything is little better because I would like to take little better than too much of aggression, and then see, I can assure my investors, you are invested in a great company. Yes, we have a steady state mindset. Okay, and investors, I would say my experience of running this business is 22 years. Okay, so my investors who are patient and investors who can see good, solid, robust growth. All I can tell my existing investors and new investors, Shree OSFM has never recorded a loss in its 23-year-old history of running this business. Okay. So, and that is exactly the DNA that we've built into the company, which probably reflects in a slower growth, in a conservative growth. But now with Suraj and other team members who are really aggressive, we see, yes. So they bring in the growth, super growth, and we, as people with experience, put that conservative part of running this business where PAT PAT, EBITDA are of key concerns to us. So that is where we are right now. So we are a great mix, of business strategy, aggression, new team in terms of aggression, and existing team in terms of the conservative approach.
All right, sir. Thank you so much.
Thank you, Mr. Jana.
Yeah, Suraj, would you like to take a little further about your aggressive expansion?
Yes. So everyone here, what we are now doing till now was for the longest of time, there was a legacy business and businesses where a lot of these clients used to reach out to us for our services. And, we used to provide. Now what we are doing is we are looking at having the business development in all the strategic locations, hiring really aggressive and smart people to come on board with Shree OSFM and go all aggressive with, there's a lot of requirement now. If you look at, there has to be a generic growth that is anyways going to happen in this employee transportation business, because we see a lot of these companies are now going back to a 5-day culture, right? So when I talk about a 5-day culture, I am in a sense talking about straight away this industry is going to have a 25 to 30% jump with the current set of business itself. So that is what we are going to see in another 1 to 2 years of time, where all these businesses are going to go aggressive. A lot of these businesses now are getting into businesses like GCC centers are being set up, where India is going to be the focus area, where a lot of this new real estate is being purchased in this market. Right. So that is one very generic, at the same time going aggressive and setting up people to come in to have this new set of businesses coming in. When we talk about the other set of growth, which is the B2C side of the growth about Uber and the Flix partnership, it is all depending on the capability and that we can build in, because demand is unlimited in this side of business, right? The intercity mobility, and at the same time within the city, the intracity, which is the Uber and the Olas and everyone of the market. We're looking at partnering strategically, have an asset-light business wherever possible, because that's a part of our DNA, and to grow that business. So the 26, 27, and 27, 28, all those businesses are going to be a serious lot of growth that we are talking about. So yeah.
So Suraj, would you like to inform our investors the good news that where Flix is asking us to increase or have a better the Mumbai, Pune, Goa route?
Yes. So to all the investors, see, when a European company like Flix comes into an Indian market, their biggest concern is that they run an asset-light business where they are not owning buses in the Indian market or anywhere they are running. So in any large business who comes to India and wants to set up, the biggest challenge for them is to have vendors or transporters who are there in the market, who come with experience of not just, or only have the capability of buying these buses with money, but the biggest challenge here is that who are the people who can actually run a very successful model and run this transport business on ground, keeping in the mind that the ground level challenges of the entirely that's happening, and also make sure that these customers at the end of the day are happy with the services. So when that comes in, Flix has been very aggressive behind us and telling us that, see, we want someone who's a listed company who comes in with experience of 25 years in the market to run transportation and taking people from point A to point B. This is what the legacy we come in with. They are very aggressive, asking us to go towards Delhi NCR, to Bangalore, to other metro cities as well. But as Nitinji said, we are very true to our DNA. We are a company which takes care of the investors and understands that, see, we do have the money and capability to overnight grow this business to a $1 million business when it comes to the top line part. But we want to be strategically very careful of the fact that, how we utilize these funds and how we utilize this money. So we want to check all the boxes. And from Mumbai itself, we currently have an option of at least starting 10 different routes, which is going and coming back at least 20 to 25 buses. Request is there where we can go ahead and start these different routes. These are very successful and large routes. I'm talking about Mumbai, Ahmedabad. I'm talking about Mumbai, Surat. I'm talking about Mumbai to even Pune to Indore. There is like n number of routes which are available, which Flix wants to start with us. So it's all about we having that surety testing in our initial these 2 to 3 vehicles that we have. Once we have the numbers coming in, we are looking at going all aggressive in the coming time. So that's where we are in. Yeah.
Thank you, sir. Yes, Ms. Suchi, you can go ahead and ask your question.
Hi, thank you for the opportunity. I had a few questions. So I'd like to understand the current mix of clients between the large corporates and the MNCs and the domestic enterprise. What's the current mix like?
All our clients are in the diamond category. We have this category. For me, any client for that matter is a diamond client.
Okay.
So, Suchi, can you be a little more clear in terms of what is it that you would like to understand from us?
So maybe like top 5 clients, like how much do they contribute to your like a percentage of revenue?
No, we have de-risked our business. Yes, we have one client who contributes about 30% of the business, but it's a robust client.
Okay.
And our strategy now is to de-risk ourselves and have a good mix of clients. That is where the aggressive part comes in. We were working with these clients in certain geographies. Now clients have accepted our request of allowing us to work across India. So
Okay.
that will de-risk our business. That will de-risk our business in terms of any one client having a major share.
Yeah. How stable are the renewal contracts, like the terms in the contract for renewal? How stable are they?
They are anywhere between 3 to 5 years.
Okay. Okay. So are contracts like typically at a fixed price or a cost plus or indexed to the fuel price? Because like how frequently are these prices renegotiated with the clients?
The clients see the fuel price is an inbuilt within the contract.
Okay.
It moves upwards. As far as the downward thing is concerned, there is a cap on that.
Okay.
Yeah, there's a cap on that. But the other things are invariably from, right now, that is where the aggressive part comes in. We are launching a new model where we are linking up the profitability of that project with the cost savings to the client. That is going to be a game changer because that is exactly where our expertise will come in. That is going to be a game changer in terms of what cost savings we offer to the client, and we picking up a piece of that profitability. Or let's say for the client, it is cost optimization. For us, it is going to be, and that's where we have invested very heavily. There is steady state technology available, but we have invested heavily into predictive technology. AI is going to be a major part. Though it looks as an investment today, the payback is going to be exponential from that implementation of technology. I can't share the details of that because it is a IP issue.
Okay.
But then that is going to be a game changer, and that is exactly where we're going to have a beautiful bridge and beautiful returns coming in from the combination of a B2C and a B2B. Very soon there will be any difference between a B2B and a B2C operation.
Sir, we lost your voice.
Yeah, there was a disturbance. Okay.
Yes,
Can
yes.
you hear me now?
Yes,
Yeah.
yes, yes.
Yeah. Okay. So Suchi ma'am, we are on the right track. As I said, we are de-risking from the client perspective and having overall mix of clients. Our pan-India growth is also designed from that strategy, so that location-wise, we will have a good mix of clients, existing clients, moving into other geographies.
Yeah. What is the average daily utilization per vehicle like? And like how does it differ from metro and non-metro locations?
No, metro locations definitely the vehicle utilization is much higher compared, but then we in a non-metro utilization there is sufficient backup through contracts with the clients in terms of minimum assured businesses.
Okay. So, like,
So like I'll give you an example. If Mumbai, my contract would be with the same client would be an open-ended, because I know the trend that okay, we will get 5 or 6 trips
yeah.
versus operation in, let's say, Bhubaneswar. Acha, by the way, I would like to announce to all my investors that we've started Bhubaneswar with a large client, and their growth plan is a very aggressive growth plan as far as Bhubaneswar is concerned. We are and the contract is a single contract. Single contract in the sense we are the only vendors who are going to be there for the next 3 years. So the entire growth of that territory for that client is going to be our business. Yeah. So continuing with that, the same vehicle, if I were to deploy it in Mumbai or Chennai or Hyderabad, would probably generate 5 to 6 trips. Now here it is, because of the initial phase, it will generate 2 trips, but that 2 trips are backed up by covering the entire cost of operations.
And what's the average monthly revenue per vehicle like?
70 to 75,000.
70 to 75,000.
That depends on the class of the vehicle. If it's a 4-seater, it's about that range. If it's a
Okay.
6-seater, there's another 20% hike of that.
Okay. Okay. And the current percentage of electric vehicle in our fleet right now?
We are going a little slow on the electric vehicles because too many vehicles are coming out into the market.
Yeah.
The best part is that the range anxiety, we have vehicles right now available which are around in the 400-kilometer range. So for our business, we require vehicles which cross the 250 to 300-kilometer single charge range. So we are there now, and they are decently priced where we can be competitive with these vehicles.
And is there a better EBITDA margin for EVs than the regular vehicles?
Not as of now. Not as of now, for the simple reason is that those vehicles have still not been able to do a price matching in terms of the available vehicles.
Okay.
Yeah.
In the last call, you said you were in talks for the acquisition of 2 companies. So
Yeah.
what's this? Any status update on that?
Yes. See, we have progressed to the due diligence level. Price negotiations have happened. Okay, but as I said, that conservative part of it is taking it a little slow, but my business development team is really pushing on that. And that is exactly, this is a geographical expansion that we are looking at. We identified these companies because we want to have a better hold on those territories rather than reinventing the wheel. And I think, Suraj, you can take this forward.
Yeah. So, Suchiji, same like I said that, like Nitinji updated that, right now we are at the stage of closing it. There are multiple options, a lot of factors. We are considering to go ahead and do that because the company also has to match with the ethos and, basically a cultural level fitment is what we largely looking at because we are a listed company and we understand how, this market, we see a lot of people who are burning a lot of money and bringing in a lot of top line. But, our intention is very clear that we want to get in with those companies whose operations and these factors are very clear. So, obviously, it's going to take a little bit of time from our side, but discussions are going on, and we can close in something very soon. Yeah.
Just one last question on the EBITDA margins. So broadly, we are stable right now in the low double-digit range. So what do we expect those margins to be in the coming period? And like, what is the peak margin that you can expect from the business?
We are working on that, Suchi ma'am, and I think we'll be able to, unfortunately, our CFO is not able to connect. So he'll be able to throw more lights on that. But I think we'll be able to hold on to what our EBIT levels are.
Okay. Okay. Also, I couldn't find the rationale for the preferential allotment that we did after the IPO. So I was just trying to understand what were the funds used for.
No, there was a rationale at that point of time because we were on an aggressive path.
Okay.
But then when we analyzed certain businesses, we said that let's take a step backward. See, that is going to be our DNA of our company, conservative as well as aggressive. As
Okay.
Surajji rightly mentioned that some people have just raised funds and gone very aggressive and have finally resulted in a cash burn. So that has also been a learning curve from our peers who are already in the listed market. So we are testing. See, it's just been almost less than a year and a half that we are in the public sector market,
Yeah.
right? So there is a different learning from there also.
Okay.
So those decisions will, as a part of any business, those decisions will keep happening. When do we need to raise funds? Do we need to raise funds? What is the cost of those funds and things like that? So
Okay. Thank you so much. Yeah.
Thank you, Mr. Tree. So we have a couple of questions in the chat box before we take Anurag sir's questions. So we have one question from an anonymous attendee that can you update on the deal with Adani on new airport at Mumbai?
see, as you know that we are almost close to signing off. See, these are the delays. These are the delays that are happening, which are beyond our control. As everybody understands, and it has been in the news. Adani being in the news all the time. You know that the entire launching of from the time the project got launched. I'm not talking about now when it got publicly announced about that Panvel Airport being active. To now, the timelines have been pushed by them. So that is what I mentioned in the earlier things that our readiness is 100%. It's only the clients, for whatever reason, the timelines getting delayed. So we are very much on that right now, and I think we should be through. We should be through with that somewhere close to end of December or maybe first week of January or in the month of January.
Thank you, sir. So we have next question is that participant is asking for H2 guidance.
H2 guidance is a steady state growth. Okay, all those aggressive measures that we've taken will not get reflected to that level. But if somebody monitors the trend, they will see that clear-cut aggressive part of that growth by March 25. March 26.
Okay, thank you, sir. So we have a next question from Mr. Praneeth that with the Uber partnership, with the current revenue of around 75 to 80,000 per car per month and plans to scale up, how do margins compare with the core corporate mobility business once the model is stabilized?
That is going to be Suraj. Can you take it up? Can you take this?
I just wanted to hear because the sound and all I was not clear. Can you just repeat the question?
Yeah, I'm repeating it again.
Yeah.
That with the Uber partnership, with the current revenue of around 75 to 80,000 per car per month, and plans to scale up, how do the margins compare with the core corporate mobility business once the model is stabilized?
See, we have to understand employee transportation business when we are talking about the margins and all is one side of the business. The B2C side of the business is also is a very clear cut, volume game, right? In employee transportation, we have to have a very, very straight structure that there are a set of competitors who are there in the market. There is a set of corporates only we are talking about who provide employee transportation. So a lot of these barriers are also there in gaining that business, which involves an entire cycle of approaching to sales, to acquiring them to run this business and all, right? At the same time, when we are looking at a very aggressive growth in the coming years of time, we also have to understand with this same vehicle, we are using it for corporate, there is opportunity to do a lot of this cross business and increase the utilization of these same vehicles. At the same time, have a larger market in the daytime market which comes in from the Uber business as well, because predominantly today our employee transportation business is a night business, right? We see an entire day as well where vehicles can be with additional drivers, and there are lot of things at a customization level we can do and make this like, how do we get vehicles to be running towards upwards of 18 to 20 hours. And if you look into that direction wise, we are talking about a significant change and a better ROI at the end of the day, that from these vehicles and people that we are coming in, right? So that is we are looking at this business, right? And if you talk about a pure play, when we are running an Uber business, the margin side and all, the margin comparatively to ETS are lesser. But at the same time, when we talk about the volume, that tomorrow, if I want 1,000 vehicles to be there on the Uber platform, it's a simple decision from my side. I just have to see if I can source these many number of vehicles and have the drivers, I can have that. But that cannot be the same freedom I can have when it comes to employee transportation, because I'm dependent on the fact that does the corporate also need these many vehicles. So I think if I have cleared the answer for that, yeah.
Thank you, sir. So we have next question from Mr. Sanket, that are you also looking to partner with the bus operators as well, apart from the Flixbus?
See, as of now, it will be too early for us to say that we are going further into strategic tie-ups with other people. But we also, like I said earlier as well, that whenever we talk about a partnership, we believe that we want to work with those people who have similar ethos, and kind of, because we are a listed company and we have to look at all the nitty-gritties at a very, very finer kind of a lens than compared to any other company, right? It is not just about pure play growth, hook or by crook, right? We do not believe in that as a concept. So Flix and Uber, these partnerships which have come in, we've understood that they come in with a lot of experience of running these models. These are models which also bring in a set of growth and profitabilities and all on the table, and there is a lot of growth possibility. So as of now, though we want to be aggressive, we also believe in the fact that we would want to be asset light wherever possible, right? The same time, we will be exploring these partnerships also in the future. But as of now, for us, it is also right at this stage. We want to understand that how what is this business? What are things which can go wrong about this businesses as well? So we are in that stage right now. So once that thing happens, I think by next year on, we can obviously come back and say that how aggressively we can grow and what are the different channels we would use to grow. Yeah.
Thank you, sir. So, Sanketa's next question is, apart from the four business areas you told, any other new business opportunity are you looking for, or maybe starting your own bus service? Because from the last 2 years, the intercity traveling of the employees have increased drastically due to the hybrid work model.
Yes, obviously we are exploring a lot of options, because we were evaluating 10 to 12 different ideas. Two of these ideas have materialized and we have started. Obviously, we are looking at how can, for example, there is a very large intercity business in the four-wheeler domain itself, right? Like, for example, there are a lot in different vehicles. How we can do cross run is our vehicles are basically running a Monday to Friday business of ETS. Saturday, Sundays is a very big intercity market business as well. So we are evaluating in very early stages of that as well. So a lot of cross growth of business with the current set businesses we are discussing. These when I say the Uber and Flix partnership itself, as at a volume level, they are so big that we will need a lot of manpower, a lot of kind of strategic level of interventions and all that. Making this successful or even go to a level where this is the top end that we can do itself is going to take some time, right? Because in these businesses, the volumes are not limited. We can have as many number of vehicles on an Uber platform today, because the demand is so high that supply is never able to fulfill these kind of services. And the same goes with intercity buses as well. These are the barrier to entry in these buses is very high because the cost of bus is on the higher side. So yes, that's where we are coming in. So for us to scale these two businesses itself is going to take a significant time, and we have a very large employee transportation business to focus as well. So I think we already are, I would say, diversified enough to bring in a good amount of growth in the coming years. I don't think we might need, but yes, the fifth very strong option would be a strategic partnership and acquiring some of the businesses. So that is already something that we are in the final stages of. So you will, all the investors will get an update around that as well in the coming months. So yeah.
Thank you, sir. So we have next question from Mr. Pankaj. Can you please give a brief on the tie-up of with the Uber? Anything you would like to tell investor?
So I think we've discussed everything, right? Anything specific that we want to do? So Uber is a very plain vanilla format. It is, right? We are the vehicles. We are looking at our own vehicles, aggregated vehicles who are going in and registering themselves. We have a direct partnership with Uber, right? So that's what they are running. Whatever trips are coming to them, they are running that. We are having our margins and all on top of that, and that's where the model we are working with them. And that's the only model which is there. So yeah.
Okay, thank you, sir. So we have next question is that can management break down a major cost heads, driver cost, fuel, electricity, maintenance, lease and rentals and overheads?
So it's a bit difficult to answer in the specific numbers and all. I think we can cover that in in the some future updates if that's possible. I wanted to have if that number finance team also we are having some technical issues to share those things, but I won't have that on my fingertips right now to be shared. Yeah.
Okay. Yes, Mr. Anurag, go ahead and ask your question. Hello, Mr. Anurag. Hello, Mr. Anurag, are you there?
Yeah, hello, I'm here. Yeah, hello.
Yes, yes. Please go ahead and ask your question.
Yeah. So one more question. I forgot to ask last time. What about this program that these companies like Accenture and run the MSP program? So how are we trying to leverage that?
Yeah,
The
I would take
MSP.
that. I would take that question. We have already successfully closed. Right now, tomorrow is a deadline for us to be participative. We have been shortlisted in the last round, and more or less on our offline, we have been allotted territories also.
Okay.
Over the next 1 month or 1.5 month. As of now, my entire team is sitting on the deep dive of that locations or capabilities, which will be shared before 6 p.m. tomorrow, and then the final rounds of discussion will happen.
So what kind of numbers are we expecting from that?
Anurag sir, I mean, it all depends on the closure. There is a fixed assurance of the business.
Mm-hmm.
All the territories that we are there presently are being assured to us as an MSP.
So actually,
now the
sir,
ball, now
actually,
the
sir,
ball is in our court to accept it, those locations, or we will, because as we said, and some of you have also noted it, that we don't want one client to be top heavy in our business contribution. So as a part of that, we are evaluating which are the territories that we should be working for, and this aligns with our inorganic growth. The partners that the companies that we've identified inorganic growth, those are the territories we will confidently request our client to be allotted to us.
because sir, the point is that this whole business goes to the next level when this consolidation happens in the industry from a client's perspective.
Correct. Correct. So we are there. That's exactly. But as most these companies, all of them, though we were fragmented, it's a fragmented industry. Letting go of a company inorganic takes its own sweet time.
True.
But
Okay.
from our client side, we have already there. So now, since you have already mentioned the MSP, the ball is in our court to be a pick and choose kind of location.
Right, sir. Right.
Yeah.
So
So that is exactly where the aggressive team is coming of Suraj and his team, as well as the operations team.
and sir, what about the GCC segment? How are we targeting that?
Oh, we are there. Bhubaneswar is GCC.
Okay, fine.
Okay, probably that we have already started Ahmedabad. Ahmedabad location is GCC.
Okay, so we are already targeting that. So that's a huge growth potential in that segment.
But you
GCC.
know how it works, right, Anurag sir? GCCs are again a governmental or a semi-governmental decisions. Our starting of projects there also depends on how developed those GCCs are, because moment the development happens, then the client goes in there and then we start serving the client.
Right.
Okay, so as Suraj rightly said, these are long-term initiatives. But our intent is to be there with the client, and wherever the client goes, we will go.
Fine. Thank you, sir.
Okay, thank you, Anurag sir. Sir, I think there are no other questions. So if that's so, can we conclude the meeting?
I think we can go ahead and if any other investors have any other queries, they can mail it to you and you can mail it to us. We can give a detailed reply to all the queries that they have. So I'll start with my closing address. Okay. So thank you, Kirin. Thank you, Value Educator, and thank you all the investors for taking time out on a Monday afternoon. I hope that you are aligned with our vision and growth and will continue to participate and remain with us. Yes, you can see a dedicated team working towards building a robust company. And in the coming months and coming quarters, you will definitely see a substantial growth. And I'm sure as investors, you would not regret having invested in our company. But yes, I would again sound a note of caution, saying that don't expect too much because we don't believe in the cash burn theory. Our top lines, and we just don't look at top lines, we look at all the four major markers of a good, solid, robust company: top line, EBITDA, PBT, and PAT. So I would request my investors to take a slightly longer view on their investments. Results will definitely come up. And I can also comment that we, as a company, we will outperform the market. Markets, I don't know. Stock markets, I don't know, but as a company, we'll definitely outperform all our competition.
Okay. Thank you, sir. Thank you, Nitin sir. Thank you, Surya sir. Thank you, Shiva sir.
Thank you.
Also, thank you everyone for joining us today. Thank you, Mr. Nitin sir, for sharing your valuable insights. Thank you.
Thank you. Thank you very much.
Thank you. Thanks, everyone.
Thank you. By the way, I have answered a lot of questions on the chat. If anything is there more, they can mail it to you or it can come to us. No, we'll
Yes,
respond to them.
yes.
So there were around 12 questions. There was some glitch of my voice, Yeah.
Yes, no issue, no issue.
Yeah, fine. Thank you so much.
Yes. So participants, for if there are any further questions, you can reach out to us at corporateaccess@kirinadvisors.com. Thank you. Thank you, everyone.